It has been a sluggish few years for Canadian real estate, but our guest says we may be seeing some light at the end of the tunnel. Okay, let's get a broad look at real estate. So many factors here. We're joined by Brian Rosen, President and CEO of Colliers Canada. It's great to see you, and thank you very much indeed for joining us.
Thanks for having me.
Start off with office, because it's obviously top of mind right now. Ontario government, for example, saying to all its employees, we want you back in the office.
Yeah, its office has been really the pickup that we saw in the second half of last year. It was the best quarter in Q4 for absorption in the last almost 8 or 9 quarters, where the banks, the big banks, big financial services companies, the government, they all started sending their people back to the office. And it's a real flight to quality. And we've heard that expression over and over again the last year or two. And it's real. And it showed a drop in vacancy of almost 3% in the downtown core. And that really just showed a lot of, again, the big banks and the government starting to take more space. And that's going to have a trickle-down effect on not just the top end of the offices, but the next class of office too. So we're going to start to see vacancy come down over time as more and more workers come back to office, the economy starts picking up, et cetera.
It is interesting. I mean, if I'm running a bank, I guess it would be tempting to just get rid of my office blocks and have everyone work from home. Would cut out enormous expenses, but it looks like they're not going that route.
Or they did, and now they're taking more space and getting it back. And so it's really interesting. And a lot of us in the beginning were saying that there was going to be a reversion to the mean at some point, and there has been. And I think that's what's happening, and it's going to continue to happen over time, particularly as there's no new office being built. So there was a huge amount that started just before COVID, which was awful timing, and it was coming online the last couple of years. But now nothing's going up, and so you're just going to continue to see the vacancy decline over time.
Talk to us about real estate. I mean, condos, we know there's been a meltdown there, especially in Toronto, for example. People don't want the tiny units.
Yeah, there's a mix issue is a problem. There's the slowdown in immigration and people coming in. We went from a massive housing crisis in one direction where we had no housing to now we have the tanking of the condo market that happened. So it's a complicated situation right now. So rentals are still decent, but we're not seeing much growth in the rent on that side. There still are pockets of that. And the absorption on the condos is going to take a couple of years for that to come back. But there are signs that we're nearing a bottom. However, there still expects to be distress in 2026.
One interesting thing we've heard is, this again, apologies to viewers, I think this is very much in the Toronto market. Condos were sold without parking spaces, and now they've proved to be difficult to sell. People want a parking space in many cases.
Yeah, that could be it. Also, what happened was we got a mix of a lot of one-bedrooms and studios that don't necessarily appeal to the families that are looking for it. So you got the mix issue that also created a problem. You had all the non-permanent resident decline that we saw in immigration, and that created a lack of demand. So it's got to cycle through as some of those condo prices that were being rented out start to come down, and we start to get more absorption into that market again. But right now, there's been a real pivot towards rental versus the condo.
And are we seeing a lot of rental construction, new supply?
There's not a ton coming out there because development costs are still high.
Yeah.
So we have not seen a big fall. Obviously, interest rates have made lending more affordable, which has been a positive, but it still takes a long time to develop with all the approvals and permits and other thing that goes through. And the cost to develop construction, land, et cetera, is still very high. It's not as competitive. Now, there's a lot of proposals on the table with government and other things to make it better, but it has yet to really move the needle.
I mean, the municipalities, I guess, can say, well, look, we just got to balance our budget somehow, hence these big development charges.
Yeah, but some are going the other direction and saying if nothing's developing, if you're taxing and you get zero times zero is zero, last I checked, right? So there are some municipalities that are putting in waiving development charges or putting in different promotions for that. And we'll see if that ends up trickling through. And it's a good start, but we need to definitely see more of that before it picks up again.
I sometimes wonder, do we have too much democracy? I mean, we consult residents. Are you okay with this? I mean, if a building meets code, why not just build the darn thing?
Well, I've lived in the U.S., I've lived in Houston, I've lived in places that have a much faster track for development, and that is absolutely a reality. There are benefits with having consultation, of course, but I think there's a lot of people in real estate who believe there's too much of that, too much NIMBYism in Canada.
What about the warehouses, the big e-commerce warehouses? They were such a hot category during COVID because we were shopping from home. Have we seen the same kind of growth there?
Well, digital and online buying has definitely continued. What we saw in 2025 was definitely a slowdown in some of the industrial sector. It's still a very healthy sector in terms of the amount of product and the amount of demand. So it's not in a bad shape. It just slowed down from the tremendous rent growth pace that it was on and the amount of building. So what we saw was more of the small-based warehouses and logistics were moving more frequently. The larger stuff was a little bit harder because of the tariffs and some of the uncertainty. But we've kind of gotten to a point where constant uncertainty has become certainty. And people are now just pricing that in, and they're going about and running their businesses, and that means they're going to take on more space.
Calgary, to some extent, has been an exception when it comes to lots of real estate trends. Can you just touch on that briefly?
Yeah, there's a lot of positive. It's a cyclical market. Obviously, it's very commodity-driven, but it's well-placed for an industrial growth. It's pretty close to Vancouver. It's more affordable to build there. Multifamily, it's had more influx of immigration, which has positive trends. It has a lower rent base, cost to rent. So there's more opportunity for people to live there and for investors to make value. So it definitely has been an attractive market on multiple asset classes.
Brian, thanks very much indeed. Brian Rosen, President, U.S. Northeast Region Brokerage and Chief Executive Officer at Colliers Canada.